What up, traders? What up, investors? Ken here from Dyslexic Investor, and we're going to be looking at the Dow Jones having the worst quarter in 124 years. So this is on the back of the overall market, of course, selling off due to the COVID-19 stuff and the overall slow the economic pace. And then the best. The worst that we've lost in the same quarter change is 23.2% on the Dow. S&P 500 was 20% in a quarter, so this is just 3 months, and that was in 08. And then the Nasdaq lost in 2018 on this the December time frame where we just literally fell out of the sky. And you can kind of see the overall bounce back. So ever since the posting the first opening quarter in the worst history, and then you see what the overall percentages were after the fact, on averaging basically going up just slightly, and then the second quarter being higher, and then the rest of the year just being kind of mixed due to different other circumstances. Like 2008, we had a lot more slower melting. In 1935, we had a nice rebound due to a lot of the war efforts, and then after the war was kind of just stagnant. 73, you kind of had the gold transition there between the 70s. 82 was basically another boom. We call it the Reagan economics of just pumping a lot of money and printing a lot of money in those times. And then of course we had 2008 with the overall financial crisis there. Statistically speaking, the people are saying that we could potentially bounce back pretty heavily into quarter 2 or 3 this year. So basically the rest of the year it should be up. There's a great little picture that I saw here. So this is the Dow Jones booked the first worst quarter in the most brutal market. So this is the Dow Jones composite, which is comprised of all these stocks, everything from Microsoft, Walmart, Intel, Johnson & Johnson, Procter & Gamble, Verizon, Apple. This is Visa, Nike, Cisco, IBM, Pfizer, McDonald's, Merck, United Healthcare, Home Depot, Coca-Cola, Caterpillar, I think it's Walgreens, 3M. This is just some Amex, Goldman Sachs, Disney, JP Morgan, UTX, not sure that, CVX, Transportation, XCOM, this is Exxon Mobil, Oil, the Dow, and then of course the horrible one, BA, which is Boeing, dropping 54% in the first quarter of 2020. So having with this screenshot, we can go ahead and move this to the side, and we'll pop open the charts. So again, this is the Dow Jones Industrial Average. So we almost hit 30,000 in that basically of beginning of February. So we were at an all-time high, but then dropping all the way down to literally 1,800 at the low. So we're going to look at that at a percentage basis, and that was an overall drop of nearly 38%. So slightly a little over 38% in basically nearly a month's time. A little over about 6 weeks, we dropped about 38%. That is a substantial drop in just a short period of time. This would be more common with a drop that would last 3, 4, 5 months and just dropping 10% each month over month, but not dropping literally 3 times the amount in the same within a month, 4 to 6 week time frame. And you can kind of see we're getting a little bit of a bounce here, but we still have not closed above the 21, which is my key tool on trying to gauge the markets for a potential rally. People kind of got faked out to this V-shaped bottom here. I don't think a V-shaped bottom is intact here yet. I think we can easily touch 20,000 down here again. So I'm going to create another alert down here. So I think we can easily get down to this point here once again, potentially testing these to see what happens. And we'll just have to go from there. Looking here, of course we got the oversold again very soon, because on a daily chart, if you drop so fast, the oversold just goes negative immediately and kind of gives you like a false reading, in the sense of like that's not really going to be the bottom because you drop so fast. Again, due to the market trends and what was happening, it wasn't relative what was happening. So you had to give it a little bit longer point of view of a weekly side, and you can kind of get that negative selling here. So basically bought either the week of the 16th or the previous week of last week, potentially buying the bottom. Again, so I'm saying potentially because no one has a crystal ball to see what we look at. So we can go ahead and look at a monthly chart. It did not touch on a monthly chart. It did back in 0809. Again, but that was basically, it just kept on trending lower. Will we get down to 15,000? I hope not. But again, no one has a magical ball to see what's the future. So let's go ahead and look at some of the stocks that are within the index, and let's look at BA first because that's a lot of people want to. I did a video on this. We did pick up some around $100, $98, and for a nice little bounce. This is building a longer term position. I think that BA will come back. It's going to take quite some time to be able to get back up where it was. Again, did not close above the 21 at all on the daily chart. It has extremely oversold on a lot of different readings. Even if you go to almost a monthly, it's being oversold. But I definitely think that we could potentially go back to 130 or even potentially even lower before this is all over, that is. Another one that's being hit left and right is OXM, which is Exxon. Oil has just been getting slaughtered, basically hitting a high of just basically last year this time, in April 23 of 2019, and we just been getting killed here left and right. I don't own any oil, thank God. But oil being traded basically below $20 is not good for anyone. And then the Russians and then the Middle East just pumping out oil at just trying to bankrupt our U.S.-based companies. It's very sad. It's very sad. I wouldn't touch that because this is a potential bounce and then continue, maybe go back to 30, even though the dividend might not be safe. Because again, BA. Exxon, a lot of these companies are cutting or even slicing their dividend. I know BA completely got rid of their dividend. So one that actually on the bright side that performed basically that was unchanged for the quarter was Microsoft. And this is one that we own for the position for the portfolio. You can see here on the daily chart, it has been closing above the 21, giving some strength. Yes, it's going to go down with the tide, but it's really still a work from home economy, and this is a very much work at home economy stock to have, and just the growth that they have with their web services, with Azure, of course with 365, their cloud products is just gangbusters for them. Looking at a longer time frame, it was basically nothing much compared to all the other things that were hit. It never got to the extreme oversold like we saw previously in a lot of things. Even on the weekly, it's trying to close above the 21. The mover averages, the 8, you can see here, has not completely crossed between the 21. It's kind of like hovering above it and kind of hugging it really closely and potentially could curve higher. Is Microsoft a good add? Maybe on a bigger down day. Like anything I think below like 155 is a fair deal. We did buy on the way down, adding around the 150 140 level, adding to our position that we've had for quite some time, and just kind of building up because we just think this is going to be a great stock for the ongoing future. And then another one that was performed second best, but it was still down 5% overall the same time frame, is your Walmart. And they are, again, kind of hit and miss. You can kind of see this crazy puttering here of capitulation of going up and down. The moving averages have literally turned into very tight spaghetti form, meaning I think that this is going to be, Walmart has the capital and the leverage to be able to get through this, and of course they're considered a essential necessity to the country, meaning that people need to get their groceries, need to get their supplies, so they're going to have to remain open. So a lot of other companies like Disney, which we own and we've bought a lot on the way down, is just being taken out to the woodshed. Basically having a high of just beginning of December of last year at 153, and then coming crashing down all the way basically to $78 within 2.5 months, and then kind of slowly rebounding. But these moving averages are still on the weekly chart, still curling down, and potentially this could be an ongoing issue for Disney, of course, because none of their parks are open. The cruise, no one wants to get on a Disney cruise, and no one wants to travel to anything. And the only thing they really have right now, and sports are closed, so ESPN is not really doing much of anything. So it's a really strange time for Disney. I'm a very long-term holder in Disney, so adding to this position was kind of a no-brainer, and just buying this on really steep discount. And I think Disney has the brand and the leverage of buying and getting some really debt at a very low price at these levels to be able to flourish once this pandemic is over. Guys, thank you so much for watching. Don't forget to like and subscribe down below. If you have any questions, comments, leave them in the comment section below, and I'll catch you guys in the next one. Peace.